Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate mumbo jumbo. And if you thought you were done with your homework for the day, think again, because we have a brand new SEC filing to break down. And let me tell you, this one is a doozy. It involves a lot of money changing hands and some very interesting financial instruments. So if you want to know what's really going on behind the scenes, you've come to the right place. And before we dive in, and I promise we're going to make this as painless as possible, if you love getting these kinds of insights delivered straight to you, make sure you're subscribed. And if you want to chat about this filing or any other corporate news with fellow enthusiasts, our Discord server is you love getting these kinds of insights delivered straight to you, make sure you're subscribed. And if you want to chat about this filing or any other corporate news with fellow enthusiasts, our Discord server is linked in the description below. So let's get started. All right, so what we have here is a Form 8K filing from Alnylam Pharmaceuticals. And essentially, this is a company that's making important announcements to the public and the Securities and Exchange Commission about big things happening with their business. Think of it as a company's way of saying, hey everyone, something big just happened and you need to know about it. Now, Alnylam Pharmaceuticals is a company that focuses on developing medicines to treat diseases that don't have many treatment options. They're working on some pretty cutting-edge science. The big news in this filing from September 12, 2025 is about a significant financial move they've made. They've essentially taken out a huge loan in the form of something called convertible senior notes. Now that sounds complicated, but let's break it down. They've issued these notes, which are basically fancy IOUs worth a massive $6,615 million. And the most interesting part is that these notes don't pay any regular interest, 0%. That's pretty unusual for a big loan like this. These notes are governed by a document called an indenture, which is essentially the rule book for this debt. It lays out all the terms and conditions. These notes are due in September of 2028, so it's a medium-term loan for the company. Here's where it gets really interesting. These aren't just regular loans, they're convertible. This means that at certain times, the people who bought these notes can choose to swap them for shares of Alnylam stock. This is a common feature in these types of financial instruments. When they first set the terms for converting these notes into stock, they set a conversion price. This price was about 40% higher than the stock price at the time. Think of it like this. If the stock was trading at $100, they said, you can convert your note into a share of stock, but it'll cost you $140 worth of the note's value. This is a way to incentivize the company to see its stock price go up. Alnylam also has the option to buy back these notes, but only after a certain date and if their stock price has gone up significantly, specifically if it's at least 130% off and 30% of that initial conversion price for a sustained period. This is a mechanism to potentially call back the debt if things go really well for them. Now, on top of issuing these notes, Alnylam also entered into something called capped call transactions. This is another layer of financial engineering designed to manage the risk and potential impact of these convertible notes. These are deals made directly with financial institutions. In simple terms, they bought options that protect them if the stock price shoots up too much, and also help reduce the dilution if they have to issue a lot of new stock to cover these notes. The cap price is the maximum price at which these call transactions would fully protect them. It's set at a pretty high level, around $837.61 per share, which is significantly higher than their stock price was at the time. This suggests they have a lot of confidence that their stock price will increase substantially. To pay for these capped call transactions, Alnylam spent about $35.3 million, which came directly from the money they raised by selling the notes. This shows they are actively managing the financial implications of their financing. It's important to note that these capped call transactions are separate from the notes themselves. The people who hold the notes don't have any rights or claims related to these call transactions. Holders of the notes are only concerned with the terms of the notes themselves. All of this financial activity, issuance of notes and the capped call transactions, does create a direct financial obligation for Alnylam. It's a debt they've taken on and it impacts their balance sheet. The filing also touches on how these securities were sold. They were offered to initial buyers who are expected to be qualified institutional buyers and sold under specific exemptions from registering every single share with the SEC. This is pretty standard for large professional investors. And when the notes are converted into stock, those shares will also be issued under certain exemptions, meaning they don't need to go through a new registration process for those specific shares as long as certain conditions are met, like not paying a commission for the conversion itself. Interestingly, the filing also mentions that around the same time they issued these new notes, Alnylam also bought back a large amount of their older convertible notes. They repurchased about $637.8 million of their existing 1.00% convertible senior notes due 2027. This is a significant move. They took the money they raised from the new notes and used it to pay off older debt. This could be a strategic move to simplify their debt structure, perhaps take advantage of the 0% interest rate on the new notes compared to the 1% on the old ones. Or maybe they believe the market conditions were favorable for this exchange. And finally, the report is signed off by Jeffrey V. Polton, the Executive Vice President and Chief Financial Officer, indicating that the company management has reviewed and approved this information. Now let's put on our investor hats and see what we can make of all this. Alnylam has successfully raised a significant amount of capital without taking on any new interest payments, at least not in the traditional sense of fixed coupon payments. This 0% convertible note issuance is audacious and signals a high degree of confidence in their future growth and ability to manage their capital structure. The capped call transactions further reinforce this confidence as they're betting on their stock price rising substantially, to the point where they proactively hedge against excessive dilution. However, there are always risks. Convertible notes, while seemingly cheap due to no interest, can still be a cash drain if widespread conversions occur, forcing them to issue a large number of shares. While the capped calls mitigate some of this, a major spike in stock price could still lead to significant dilution if the cap is breached. Also, the aggressive repurchase of their older notes might suggest they're trying to deleverage or perhaps restructure their debt in anticipation of future needs or opportunities. The cost of that repurchase, roughly 1.1 billion, for 63rd, a substantial premium to retire that older debt, which is something to keep an eye on. Overall, Alnylam is making bold moves to finance its operations and future growth. This filing shows a company that's actively managing its finances and aiming for significant upside. The strategy seems to be focused on low-cost financing, coupled with a strong belief in their stock's appreciation. The key for them will be executing on their promising drug pipeline to justify the market's faith and the financial maneuvers they've undertaken. Alright, that's our breakdown of Alnylam's latest filing. What's your take on these numbers and what they signal for the company's future? Do you think these financial strategies are smart or risky? Drop your thoughts in the comments below. If this analysis was valuable and helped you decode this filing, hitting that like button really helps us out, and subscribe for more deep dives into corporate America. Don't forget to check out our Discord community linked in the description. It's a great place to connect and discuss these topics further. Thanks for watching, and we'll see you on the next episode of Corporate Decoder.